A couple of weeks ago, the World Mail has published an article regarding the account balance of the average account balance of RRSPs at age 55. And I will include a link to the article below the video in the description if you want to read the article. I'm not going to talk about the article itself, because it goes on to tell you how much Canadians save and how much Canadians should have saved, and I'm not going to talk about that. But when I saw the numbers, it occurs to me, I said, what happens if someone has an average amount of RRSPs and retired with that amount, and also has an average monthly CPP pension? And well, the result is kind of worrying. So let me share that with you. The article reports that the average RRSP account balance at age 55 in 2026 is $180,000. Now, the average doesn't really tell us the amount. It doesn't really tell us the problem, because there is a lot of people with millions of dollars in RRSPs and a lot of people with very little amounts in RRSPs. So that doesn't tell the real story. What it tells the real story is the median amount. The median amount is to $120,000. And this is where 50% of Canadians has more than that, and 50% of Canadians has less than that. So that tells us what the real problem is. And then I said, well, what happens if these people, this same person, happens to have about receive an average CPP amount every month at age 65? And in 2026, that number is about $800 per month. And for the purpose of the illustration, I have also need to use all-day security, and I'm assuming that you qualify for full all-day security. This happens when you have at least 40 years of Canadian residency between ages 18 and 65. If you between the age of 18 and 65 you live less than 40 years in Canada, well, I suggest that you should stay away from RRSPs, because 9.9 out of 10 RRSPs are going to hurt you. But that's a different topic that I can run a video specifically on that. But in here we will concentrate on 40 years of Canadian residency. And and if that's your situation, and you will retire with $200,000 or less, you should consider this as a very important factor. First, we're going to look at a single individual. Single meaning single, widow, divorced, a person with not without a spouse that files the income tax as single, and assuming that it receives is age 65, receives $800 per month of Canada Pension Plan, maximum all-day security. And first, we're going to look at what happens if it doesn't have any RRSPs, doesn't have anything, any other income. Well, if that's the situation, between January and March of 2026, you will have received $551 per month of guaranteed income supplement. These are actual rates, real rates. And for a total of $2,093. But now let's see what happens with the effect of the RIF or the RRSP, which is the same thing. The same Canada pension plan, same all the security, and now we are going to add $600 of withdrawals from the RIF every month. So the guaranteed income supplement will be reduced to $237. So this is the total amount, and your $600 of RIF amount to $600 of your own money, it reduces $314 of the pension money from the government, or 52.33% of your $600, which is a hefty tax bill to pay, guys. So even if you have $200,000 in RRSPs, and when you leave it, you withdraw $1,000 per month, so your guaranteed income supplement will go down from 551 to $37 per month. So decreasing $514 every month, or 51.4%. This is a lot of money to be paid in literally a tax, because the guaranteed income supplement is paid out of the general tax revenues. So you have to be careful, and you have to find a solution. So I can help you to do that, or you need to talk with your financial advisor if you think that this is your situation. even if you are a couple. That's for a single individual. If you're a couple with the same amount of RRSPs, now I double the amount of CPP because I will consider that each spouse has receives $800 per month, double the amount of all the security. So in the first case, we don't have any RIF. So if that's the situation, your GIS will be $437 per month for a total of $3,500 every month. Now, here is what happens if we have some RIF. So if you have $600 per month on the RIF, the GIS will go down from $437 to $137. So you're losing $300 right there. So half of your 600, your total amount will be just over $3,800 per month. And so your $600 per month is going to cost you 50% in your GIS reduction. And if you have more money in other species, if you have $200,000 and you withdraw a little bit more, $1,000 per month from your reef, well, the impact is not going to be as high because the GIS will decrease only by $437. We will go down to zero. And so that will represent a 43.4% of your $1,000. It's still a hefty tax bill to be paid. So this is the reason why before retiring, you should have a written retirement plan. A written retirement plan it must cover your income tax strategy to maximize tax credits. People do not pay attention to tax credits and they're critical, especially at retirement, because once you turn age 65, two critical tax credits kicks in, which is your pension credit and your what is called the age amount. So between the two, they'll give or take about $11,000 of non-taxable income that you can receive um, at the lowest marginal tax rate. So I will have a video exclusively to talk about tax credits in the coming weeks. And also a written retirement plan, we talk about timing. Timing is essential, guys. It's so important. Timing on when to apply for CPP, when to apply for all the security. This is different for all of us. Our situation is unique. Everyone's situation is unique. We cannot have this generic plans, generic softwares that calculate retirement and gives you a return based on whatever. No, it's not based on whatever. It's based on our personal circumstances, and we're all different. So RRSP withdrawal, so melting, how to withdraw RRSP as soon as possible. Most people try to kick the RRSP withdrawal to later on in life, when that shouldn't be the situation, because the tax rate is tax rate, and you need to formulate that together. Give me a call and to go to my website, pensionbooster.ca. You can contact me there. Just send me a simple message. Say, Ruben, please contact me. I need to speak with you. And I will send you an email. I will reply by email with tentative dates to meet. And I can give you a meeting of half an hour to help you with your case. I'm not going to charge you anything for half an hour. Okay. So don't delay because this is important. It is a lot of money in your pocket. In the next few videos, I will show you why early RRSP withdrawal matters so much. Actually, it matters so much because it can help you to solve the problem that we just discussed. And also, if the income at retirement will be high enough to claw back your old age security, your tax rate could be outrageous on your RRSP withdrawal. You need to watch for that. And make sure that you subscribe to the channel. You don't want to miss the new calculators that they're coming. They're almost ready. I've been testing it with a few clients. People start loving it because it gives you control over your retirement and easy to calculate. So make sure that you subscribe to the channel and you click on the little bell so YouTube will let you know when I upload the next video. Up until then, thank you for watching and I'll see you on the next video.